Friday, March 10th, a close to a very big week, as most weeks can be in NFTs and crypto. This show focuses on NFTs, crypto, technology, finance, entertainment, gaming, and everything in between. I'm your host, P.O., here with my co-host, Nifty Nick, the funniest man in the business, now no longer the owner of an ape and a punk. Some big news in Nifty Nick world. Of course, King Kicks, the CEO of Crypto Raiders, the founder of Cyber Stadium, which launched yesterday. Really exciting to see how things are going over there with the digital gladiators. He's also a co-founder in the Nifty and an intelligent degenerate in his own right. Easy Eats Bodega, the host of GM Market Talk, the host of Web3 Made Easy, and the founder of Bodogos, soon to be the #1 collection on a blockchain near you. Spencer of Spencer Ventures, representing for institutional capital in the NFT space, just absolutely crushing it. Signal, the host of Artist Spotlight. We absolutely love hearing Signal's takes and how she moves in the market. She's made some absolutely legendary maneuvers in her time in Web3. And last but not least, we have Bunny. Bunny, your bio just says that you're mad at Nick.
I don't know. I'm really just disappointed, P.O. He paper-handed his ape, dude. What is going on?
Would you call it a paper hand?
Yeah.
Yeah, it was. I took the L on it. It was difficult. I actually wanted to sell it at 120 the other week, and I've been just watching it go down. And I was like, I've been having a lot of financial conversations. It literally caused the short relationship that I had with somebody to completely end, and as not the ape sale. Okay. I'm just saying, I'm talking about like the conversation of finances, and I'm sitting there and I'm just like, what the fuck am I doing with this many NFTs? I like my punk. My punk is good. I said my expectation was Bored Ape Yacht Club would drop one other thing, and they dropped it. I'm assuming they'll do other stuff in the future, but like, what are you looking forward to on the horizon that the ape is going to give you access to? Like an in-person club with like a bunch of dudes? Like, I don't know. Like what legitimately, like what are you holding on to the ape for? And I've never held $100,000 collectible in my life, let alone $200,000 collectibles. And that's just where I'm like, all right, this is unreasonable. Like, I'm just being like financially irrational. And I also found myself looking at apartments. Let me just make one quick tangent, because there was something that stood out to me yesterday. So the apartment I live in is absurd. Like it's I have a 3-bedroom apartment for myself. I'm just gonna come clean on this. And it was a bull market decision. And so I got a 3-bedroom place. It ain't cheap. Like living in New York, let alone Brooklyn. I've had people been like, "Oh, you live in Brooklyn? You disgust me." And I'm like, "Okay, wow." But
how many floors is the apartment there?
There's 2 floors in this apartment. Okay, so I have 2 floors in this.
How
apartment.
many bathrooms in the apartment?
3 bathrooms in this apartment, and it's a gorgeous apartment. Do not get me wrong.
Nick, how many people live there again?
Myself, and I've never lived in a place, frankly, this nice. Like, this is potentially as large as my mom's house that she lives in, that I grew up in. And so this is like the most luxurious place I've ever lived. And I'm just sitting here looking at this being like, okay, it was fun. But at this point in time, it's been a good ride, and I want to focus on the business that we're building and not be sitting there. You know, it's attractive when you have a great view of New York City, but it's more attractive living in a slightly smaller place, but having money than being broke. So I'm just saying, like, at the current trajectory, I was sitting with that. But sorry, this whole tangent was just to say, I go and check out an incredible apartment yesterday. It has this like huge balcony that
one of the top 3 buildings in our neighborhood.
Okay, so it's a huge terrace outside. I would save $2,000 a month. So that's almost $25,000 a year, which to me is a significant amount of money. And so I go and I'm checking it out, and the woman's like, "Oh, so you're downsizing?" I was like, wow. Like, okay. I mean, I guess that's how you can phrase it. I'm like, this is a pretty nice apartment, but yeah, call it downsizing. I felt insulted. And I'm going to be honest. I've just been dealing. I'll just come out and say it. The person who I was seeing for a short period of time the other day asked me for $400 to pay a bill of hers, basically. And so there's been a lot of money things on my mind. But the last thing I'll say for the context of this, for anyone that's wondering, Pio's shocked that I'm even bringing this up, but it's just triggering because I had a conversation with that person last night, and I was like, so I've been sitting here thinking about this. We've been going to nice dinners. I've gone on, we went on a trip somewhere, and I was considering going on another place and that I'm going to like pay for because I really wanted to go on vacation. And she's like, she texted me for $400 to pay some class that she was taking. And I was like, excuse me? I was like, I was happy paying for like the meals that we were going on because I wanted to go to those places. So it's not like her obligation. I wanted to go on this trip. I've been desiring to go on one. Yet this bill just felt like weird. And last night we had a conversation because she had thrown some insults my way when we were talking about the $400. Like it was like that I was cheap or something. And I'm sitting there thinking about it. And I'm like, wait, I've spent a substantial amount of money in the first 2 months of dating this person on dates, on on activities, on potentially trips and things like that. But she needs $400 to pay her bill. And she has the money. She showed me her own bank account. She has savings in her bank account. She can afford to pay this bill. So this was the make or break thing for this particular person. And last night it hit a moment where I'm just like, you know what? I'm fucking pissed about this. I'm like, was everything else like insufficient? Was there something you were looking for to see if I'm a provider or if there's some indication of me as a man, as an individual with paying for this one $400 bill? And I took a stand. I said, I'm not fucking paying the $400. I'm not paying for that because I paid for all these other things. If there's any indicator of my financial well-being, well, it's come out. It's clear. I have money. I don't need, like, I can pay for dates, okay? If that's the thing that I need to pay for. But this $400 bill, 2 months into dating this person, go fuck yourself. And basically,
how much weight does your credit card have? Do you have one of those heavy ones?
I have multiple heavy credit cards, and she's gone. That was it. She was like, she literally, after having this conversation about the things that I was paying for, she was like, "But are you paying the $400 bill?" And I was like, "What? What? Are you kidding me? Are you kidding me?"
My takeaway from this is, Nick, that you got liquidated on your ape trade in order to live the sugar daddy lifestyle, and you still ended up single.
No.
Nick, my take
I will say it did happen around the same time. So that is like, that's not an invalid take on the situation. I just feel like that sequence of events, I just feel a little bit like offended because I'm just like, what the fuck? Like, dude, I've been aiming for a trip to Turks and Caicos. Never been there. It's a nice place. Let me tell you, it's not cheap. Like, go look at hotels in Turks and Caicos. It ain't cheap. So you're going to spend 10 grand or something like that to go down to Turks and Caicos for like 5 days or something.
It's like she tripped over $400 and missed out on a $4,000 vacation.
That's what I'm like. This was. Sorry, go ahead.
Makes me feel like you have some exposure to Silicon Valley Bank. Is that true or false?
No, I don't.
Okay, that's good.
Wow. Well, I did not know that the show was going to start that. Hey, ladies and gentlemen, that wasn't on the call sheet. Clemente didn't put that one on the call sheet. I wasn't aware of that segment, if you will, right there.
You can't afford $400, you little punk.
Yeah, that was pretty fascinating.
But Kick summarized it. I just want to end that, which is like she missed out on a $10,000 trip because she needed to pay $400 for a class that she was taking. That's the moral of the story. You made a bad decision.
More important than vacation.
What's that?
Education's more important than vacation. Wise words from Bunny Nick.
Well,
Great
you're right
topic.
about that, but
Yeah, did you not
She-
care about education, Nick?
she had the money to pay for it. That's what I'm saying. So like you missed out on Turks and Caicos.
Do you mind doxing how much was in the savings account?
Over $10,000.
Oh,
No,
damn.
not savings,
My-
in her checking account. Sorry.
Oh yeah. So
Do you mind
yeah.
doxing what class it was?
Can you share
ladies,
this individual's social security number for the betterment of the space?
ladies
She
and
was
gentlemen.
studying to become a doctor. Okay, and so there were a couple of classes that she had
Oh
a
wow!
monthly
So there's
payment on.
one less doctor in the world now. I don't know. Is that worth $10,000? Having one less doctor in the world? I don't know, Nick. You're sounding a bit cheap right now.
Well,
She's still on the path to becoming a doctor. Like it was weird. She was both able to pass these tests on the first go round, yet not intelligent enough to figure out that she missed out on a $10,000 trip. So I'm just saying, like, I don't know, like, is standardized testing really efficient or not? That's the moral of the story.
So there's a hard stop on this bit at 9:20, but I have to ask. So Signal, being a lady, Signal, what do you make of the situation? You've heard now every detail, it seems. What would you say?
Hey, I've heard too many details about this story.
I told her about it before it came on here.
No, I'm pulling Nick's leg on this. That like he's being cheap about one less doctor in the world. All I'm going to say is this: if you've been dating someone for 2 months, and as anyone, as a guy or a girl, you come into that relationship asking for like a burn rate of $400, can you pay for this? Can you pay for that? When you can see the other person is paying for a lot of stuff, I do not think that is fair. I just think it's way too early in the relationship. 8 weeks? That's 8 weeks, guys. January, February, and then like a $400 invoice. Nah.
Yeah, Nick asked Signal and I like our opinions on it, and Signal said that, and I was like $400. I mean, if you're having a good time, maybe just throw it.
But the reality was, when I thought about it, there was the part that I missed, which was that I've been paying for nice dates. I mean, look.
Well, you don't want to be a split check kind of guy out the gate, right?
I wasn't. And
That's what I'm saying. Like you're like, I'm paying for all the dates. Like, you're good. That's standard.
I know, but it wasn't just like 1 date, 2 dates, 3 dates. It included
multiple over 2 months.
Included a spa weekend. It included like other like
weekend. Well, no wonder she's asking for $400. You're taking on a spa weekend within the first 2 months.
That is quick. That is quick. Ladies and gentlemen, we're moving on from this. That was an electric start to the show that I did not see coming. Did not expect that. You never know what you're going to get with 9-hour Nick. Also loved seeing the audience is very divided. There's commenters saying, get rid of her. And then there's other commenters that are being like, bro's got a punk, but can't afford $400. So there's definitely a split in terms of what people think should happen. Anyway, ladies and gentlemen, on the show today, we are going to talk about what is yet another crypto dip here, given the action that seems coordinated by government entities here against Bitcoin mining, against Ethereum being a security. We're also going to talk about Yuga Labs' upcoming events and actually do a new segment that Clemente has come up with called Bring Your Degen to Work Day. So it's going to be very interesting to see what exactly is the story with that segment. But kicking things off, we got the weather report. We got Signal. Signal, please take it away.
Yeah, everyone, here is your free weather report, not costing anyone $400. Today, Friday, 10th of March, market volume coming pretty well at 74 million. Blur still taking the lion's share at 54 million. OpenSea down at 13. On to leaders, we're seeing a pullback. You got Apes down at 68. Nick, you sold just in time. Mucent's at 14. Punk sold in 65. Azuki sub 14 at 13.9. Moonbuzz doing pretty well. They're up at 6.8, down to 6.5 now. Pudgy's Pudgy's at 5.3. Doodles and Captainz at 4.9. We need them to go back over 5. Over the past 24 hours, you got Pixel Vault shared a new video with all the upcoming big news. The team has emphasized this year it's going to be more about building in public, no more silence. And instead, they're going to be, we got big stories with the lore, the free comic, Punk 4, and the alpha game release, the one game everyone's been talking about, Inhabitants pumped to 0.8 ETH floor. On to Proof. Proof have announced that they are holding an event at South by Southwest, and they also had the Lucrece collab drop yesterday. All of this made Moonbirds go up to 6.8, but they're now coming down to 6.5. Onto coffee, Starbucks Odyssey dropped on Nifty Gateway. Some minters are calling it a train wreck of a drop after Nifty Gateway's interface absolutely crushed and failed. But it was a good mint if you managed to do it. It was $100 to mint and $380 floor this morning. And lastly, yesterday was a barrage of bad news for the markets. Firstly, New York said Ethereum could be a security. Then JP Morgan cut ties with Gemini. Biden said there could be a 30% tax on all electricity used to mine Bitcoin. And all of this news plus Silicon Valley Bank absolutely annihilated crypto. We got BTC at 19.9, ETH at 13.98, Sol down at 16.9, Ape at 3 now, and Blur reached an all-time low of 0.46. My goodness. Overall, top collections were down about 5% on the NFT markets, with crypto and alts taking a smashing. When it rains, it bloody pours out there. So the next 24 hours is looking pretty damn thundery. Back to you guys.
Can we clip a signal getting increasingly loud because the music's getting increasingly loud? Because that was hilarious.
Crushed the numbers. She was flying the numbers out. So good.
All right, I fucked up somehow with the audio. Sorry about that, ladies and gentlemen.
You're like sitting there like silently. We need a clip like which cuts away to a hand moving the sliding volume up, which is PO.
Why are we yelling?
All right, I made a mistake. Get over it. I also got distracted because there's a comment from our guy Rainey Reese, loyal listener, love Rainey Reese. He said she's Franklin's girl now, implying that. I thought that was pretty funny. All right, ladies and gentlemen, updates from the Nifty Daily Digest, the daily newsletter that's published at thenifty.com. Make sure you subscribe, THENIFTY.com. ETH has been labeled a security by the New York Attorney General in a lawsuit against the crypto exchange KuCoin. Animoca Brands announced the launch of a physical, private, members-only club with its first location in Los Angeles. So Animoca Brands front-running the Bored Ape Yacht Club, making a Soho House competitor. This is one where people can play video games together, apparently.
A Soho House, but it's called We All Depressed.
Someone said that?
No, that's what I'm just saying.
Nick, don't lie. You and me would sit there and run Rocket League in a fancy club for like 6 hours. Quit pretending.
Dude, I bet they have really good cappuccinos.
I bet it's going to be cool, and you guys are just haters. Pixel Vault published a video teaser of its upcoming roadmap, which includes updates on its gaming and comic verticals.
Can you play that?
Play it.
That's still funning. Hey, hold on, what's that? Pause. That was incredible. The video literally says, "Are you still funning us?" Basically.
Still fun and tough guy.
Ow!
Yes, the answer is yes, I am.
Yeah, based on that statement.
It goes still funny, and then the FU pops up. If you watch it, it's like still funny. FU.
So ignore the audio. It's saying Punks 4, and then the Supernova. Brace yourself. This looks like an After Effects, like literally off the shelf animation. I don't know, but
Battle Plan Alpha, our debut game powered by Reboot. Anything else? Yep. Here's a sneak peek. Some art, comic book art.
Hold on. Wait, hold on. Here's the sneak peek with the pencil drawing. What the fuck?
Okay. Nick, okay.
Hey, it's more than one Moonbird, Steve. Calm down, buddy.
That's true. Moonbird spent 6 months to get one sketch on a piece of paper. So I mean,
stain on it. You know, at least this stuff looks clean, digitalized.
Okay, no, we're not trying to have anybody be mad at us. Last update: Justin Sun, the founder of Tron, has provided $100 million to Huobi, a crypto exchange, to be used as a liquidity fund to protect against drops in the value of the HT token. Yep. Those are your updates.
Did you see the token yesterday?
That exchange is properly pronounced. Whoa, boy!
The token went minus 97% and then up 1,500% in 7 minutes. Like the definition of the wildest swing I've ever seen. It fell from like It fell all the way down to sub $1 and then basically pumped back to where it was and then went up even higher based on the Justin
It
Sun
fell
failing
down
out.
from the Justin Sun and it pumped back to the moon. But I don't know where it's at now.
Nick, you get 9 hours of sleep last night again? You're on fire.
Oh man, I mean, so we had a little business dinner last night, and Nick had 2 glasses of wine. So I don't know what happened afterwards.
Well, which is what led to that breakup conversation last night. I'm gonna be honest.
After dinner, oh
It
my
did.
God.
Imagine feeling crazy.
It did.
Oh goodness.
I was like spiking the ball. I was basically like on the call. I was just like, all right, if I'm going out, we're going out in a blaze of glory. Let's fucking go.
Oh my goodness! Wow. And also,
I was like, oh, you want $400?
I'll show you what $400 is worth.
That wasn't my exact saying. I want to be clear, but
So
I was kind
yesterday-
of feeling that way.
Yesterday was a wild ride for crypto, but I think it pales in comparison for the wild ride that must have been the experience of dating Nick.
I mean,
And I think we need her side of the story.
Oh, I
She
would.
had that $400 in the bag until this guy got 2 glasses of wine down the hatch.
Oh, I would get her on the payroll immediately as a content contributor if we
I
could
was
get that
considering
started.
it. I was
wanted to
like
go on
working
for her
towards the
daddy.
day. I was like working towards the place where our company was going to fund the $400, but this was the setup for it. But unfortunately, I don't think we're getting back together.
Okay. It also occurred to me looking at the numbers of the show. I think we earned new listeners from the great show we did yesterday with Ray from 9gag, and now they've come to the show and they're like, "Wait a minute, what is this show?" Because it's a little bit different than yesterday's. Anyway, diving in. So the crypto dip. Spencer just alluded to it. By the numbers, over the last 24 hours, ETH is down 9% to a price lower than $1,400. Bitcoin sub 20K, an 8% dip. What's your buy zone? That's a question for Easy, for Nick, for Kicks, for Spencer, whoever. Signal. I don't know. Like, let's just dive in.
1100.
Okay.
We haven't talked about like one of the biggest catalysts to the dip yesterday, which was Silicon Valley Bank. Like there was a proper good old-fashioned bank run that happened yesterday.
Spencer, it wasn't just Silicon Valley Bank, right? There was 47 banks yesterday who experienced a specific level of bank run.
Right.
47. Absolutely. And like, I haven't heard of any of them besides the SVB, but
Give
it
them
was
those.
wild.
I need to
Yeah,
check on.
I just shared them in the private chat. If you go to, let me find the tweet. I'll reshare it here.
You texted me yesterday, Spencer. You're like, yo, are you hearing rumors about Silicon Valley Bank? And I was like, what? And that to me just sounds so absurd. So, okay, let's say they had a bank run, but is there actually concerns that
They're
don't
selling
have
the bank
sufficient
today.
capital?
They're selling the bank right now. They couldn't raise capital. They're putting the bank up for sale. It got announced like 10 minutes ago.
Yeah. So this is actually like really, really bad.
That is really, really bad.
So basically what happened yesterday was there was rumors of Silicon Valley Bank's insolvency due to it underwriting a lot of like startup crypto companies. And a bunch of the top tier VCs sent emails to their entire portfolio being like, yo, we think Silicon Valley Bank's insolvent, like take your money and run. And if it wasn't insolvent, it's unclear if it was insolvent yesterday morning. But after those emails, it certainly became insolvent. And one of the reasons they did this was they were disclosing they were trying to do a fundraiser where they were issuing new stock. So their stock was down like 70% yesterday. That's actually something that I'm looking at right now is like, at what point is Silicon Valley Bank stock a buy? But this is really bad because the thing is like it's FDIC insured, but FDIC insurance is only up to $250,000 per account. So, and the problem is most of Silicon Valley Bank's customers are startups, right? Like that's a very popular startup bank. And so if you're a startup,
Which I never understood, but continue.
That you had a lot of, there's a lot of companies that raised millions of dollars. And so they're only insured for 250,000 if it truly goes under. And I think the narrative, I actually talked with the head of risk management for one of the large banks in the US yesterday. And I was talking with him and his stance. And it seems like the industry stance from the banking perspective is like, yeah, they just underwrote too much crypto stuff. And too many of those companies just like went to zero and had to withdraw deposits because they lost all their money. And then like, again, it's one of those things where like, it doesn't really matter if there was insolvency yesterday morning because the rumors of insolvency caused a bank run, and now it is insolvent.
But did you see what else they did too? Was they took out I want to say it was bonds that were like 10-year bonds and sold them for a loss. Was the other thing too. So like
But
they
they
tried
had
to
to
take
do that because of the liquidity. Because this wasn't
Exactly.
a solvency.
It was because of the liquidity.
It's because of the liquidities, and here as well, it's likely there will be like a lot of other banks, because of what's happening to interest rates and inflation, are going to have a lot of their money locked up in treasuries, and are going to have to fire sale on them, and essentially we're going to see more of these sort of Silicon Valley bank situations.
And this
happening
all
across the
stems
market.
back to the. It all stems
pause
back
one
to the
sec.
0% hold rate is the issue.
When you say because of the liquidity, what you're saying is they need to sell those assets so that they can fund withdrawals, correct?
Exactly.
Yeah. And so the reality is a bank, in terms of reserves, I feel like only has to have like 10%. I don't know what the
0% right now of reserves.
Yeah, legally they only need, but I think the when they did like stress tests and all this other stuff, there were certain levels that they needed to have. And I don't know what the exact amount is that they need in terms of short-term assets on the books, but I believe it's something like 10% of withdrawals, whatever it is. They don't have 90% of the money. And that's the way that reserve banking operates. So like technically you don't have that cash. And so, yeah, if you have a bunch of withdrawals that you end up needing to fund, then it can create a short-term liquidity squeeze. But yeah.
The irony of all this to me is that this is like kind of the Web 2 version of what happened to FTX, except it's totally legal. You can just borrow customer funds, use them to buy treasuries, lose money on treasuries. And not only is it legal, but, at least FTX, when they collapsed, they longed a shitcoin that went to zero. This is like a bank being taken down by like a billions of dollars AUM bank being taken down by like an interest rate going up by like 1%. And the yield bearing product, they've taken a loss of like 2%. Like, come on, man. Web 2, everyone's like, oh, like, crypto is so bad, like FTX is awful. Like, welcome to fucking the entire financial system, bro. This is just how everything works. Like, wake up and smell the roses. I don't know.
Calling it like it is. Yeah, Silicon Valley Bank. I never fully so the only thing they had going for them was they were based in Silicon Valley. But if you lived outside of Silicon Valley, you had never heard of this place, but of like the actual bank itself. And when I moved to San Francisco, I remember people talking about them banking there, meeting people that worked at Silicon Valley Bank. They sponsored a lot of the events that were going on in San Francisco because they were looking for depositors, that being the startups. And in the case of startups, if you can raise, if you're raising $5 million, $10 million, you have a lot of cash that's basically just sitting on your books, including early stage startups. Like you raise a Series A for $5 million, $10 million, something like that. You're just not spending it all immediately, which is great from a banking standpoint, because there's just a bunch of money sitting in an account, which probably isn't going to be withdrawn. But I never fully.
These guys aren't small either. They have $100 billion in assets.
And what I never understood, I mean, at some point another bank's gonna buy them, right? Eventually it gets cheap enough that they're gonna say, hey,
did anyone buy Bear Stearns? They're about the same size as Bear Stearns.
Well, and the other thing too that you have to realize about Silicon Valley Bank is Silicon Valley Bank has a lot of kind of like weird products that not a lot of other products that companies have. Like Silicon Valley Bank not only banks a lot of startups, but actually banks a lot of VCs. And one of the biggest products that they offer that's kind of unique is they offer a capital call line of credit to venture capital investors. That product is probably still solvent, but there's certain obligations that a bank may not want to buy from Silicon Valley Bank, especially one of the biggest ones being their crypto customers. So larger banks tend to not want to underwrite crypto companies, and Silicon Valley Bank still has a lot of crypto companies that bank with them.
So Spencer, just to get this straight, I want to understand their business model was, we're going to loan money to risky startups, and then we're also going to loan money to the VCs that are giving money to these same risky startups. So that's an interesting business model for a bank.
Well, okay. To be clear, capital call line of credit loans are like very short term and very low risk.
And so I just want to articulate what that means. Like the VCs raise $1 billion, call it, and then they spend money. But oftentimes the investors that VCs have their own investors as well, the LPs in their funds. And when that money comes in, say you have $1 billion fund that you raise, oftentimes you don't get all of those $1 billion up front because that money is tied. Instead, it's a commitment from these larger institutions that are saying, hey, yeah, we're in for $150 million, but that money doesn't show up immediately. So what happens is, as you're making investments in some of these different startups, you end up needing to make what's called a capital call to go to those investors and say, hey guys, we're making this $25 million investment. And so what Spencer is describing is, hey, in order for those institutions, because institutions have a lot of capital, but it's typically tied up. And so what they say is like, I trust that Harvard, for example, that invests in a lot of venture capitalists, their endowment fund has money, but it may be in real estate. It may be in something else that's a longer term asset, but they're good for their money. So what Silicon Valley Bank will say is, hey, we'll lend you the $25 million that you need. We trust Harvard and we trust your LPs here, but we know that you need to close this deal and the deal is about to go down. So we're going to give you the money in the short term in order to fund your investment in that startup, and you're going to pay us an interest rate of 6% or whatever the amount is. And then eventually Harvard comes in and says, here's your money, right? Is that a correct sort of?
That makes sense. Sounds like it worked out great for him.
Well, hold you're simplifying it to being like that one product is the source of the issues here, and I think that's not actually the case.
So that product was fine. That's actually their best yielding product. But the thing is that's interesting about that product is if another bank were to acquire them, very few banks offer that product, right? And so this is like, unlike if you're buying like another bank that does exactly the same line of business. Like that is a unique product offering from Silicon Valley. There are a few other banks that do offer it, but it's sort of a more niche thing, right? The thing that really got them in trouble was that they basically like had certain assumptions of liquidity of the companies they were underwriting. And then a lot of them just collapsed because of FTX, right? And so this is still like contagion from FTX is that they underwrote a lot of crypto companies. And in doing so, they were borrowing money from crypto companies in the form of deposits and then lending them out. And then a lot of those companies, when FTX collapsed, were like, okay, well, we need all of our money from our bank account right now because all of our crypto assets just got liquidated, right? And so there was sort of a bank run from crypto companies just withdrawing the cash to like pay their salaries or do whatever, or, rug pull their VCs, whatever they wanted to do. They need their money out of the bank. And like that drained deposits. And again, this is the thing of like TradFi banks lend out your deposits. Like that is their business model. And so if a lot of people pull their deposits, then they have to do stuff like what happens is then they're under like that 10% has to be maintained, right? And so like if the liquidity gets pulled out by the crypto companies that were insolvent because of that were having like cash issues because of FTX, then they need to sell down assets on their balance sheet. The yield curve for treasuries is currently inverted. So they had these good, smart 10-year treasuries that they're underwater on. They had to sell those at a loss to maintain liquidity thresholds, and now they suddenly booked this big loss in their balance sheet that they had to disclose, and then they tried to do a fundraise by issuing new stock, and that kind of caused a death spiral.
So a comparable situation is actually what happened with Genesis in the sense that like they took essentially customer deposits. In this case, Gemini was one of their biggest sources of capital, but just one of them. That would go into Genesis and they'd lend that money out on a long-term basis. When everything's going well, that's great because there's enough float in the pool where there's new money coming in to offset the money that's going out on any given day. And so that all works. What happened in the case, like you're saying, Spencer, of FTX, it's the exact same thing. A bunch of people said, like us, crypto companies that have money say, shit, like this doesn't look good. This could cause contagion, and the possibility of contagion causes contagion, basically. And suddenly we all say, well, we want that money. And so what Genesis's books looks like on those days is more money going out than coming in, and that works for a couple of days. But now you got to figure out what they had to do is they had to lock it down, and they have to sell essentially what's these long-term assets. And some of the stuff, my assumption that Genesis was using in order to fund 10% interest rate style interest is really long-term locked up assets that there's no one they can't liquidate it unless they take a very significant loss. So they're going to sell it for 50 cents on the dollar essentially in order to fund those deposits. Treasuries, on the other hand, like you're saying, Spencer, you can sell at a discount of 1% or something like that.
Yeah,
So while it's a loss, people trust treasuries. People aren't going to trust the assets that maybe Genesis had on their books, which was like probably some really creative assets that who knows where that money was going. And so it's a much riskier thing.
Well, and it's important too. Like you have to realize. So like the I think they sold something like $30 billion or $32 billion worth of treasuries and lost like 1.8 billion or something. It was somewhere in that magnitude of like, it was a loss, but it wasn't crazy. But it was just all these different disclosures together. The real issue was withdrawals. And this is where you have to understand that like banks are borrowing your money when you deposit it, right? You are lending to the bank depositing to the bank is the same as lending to the bank.
Did you see Spencer, First Republic Bank is down 40% today?
Yeah. But this is contagion risk. Now everyone's like, which bank is next? I don't know. Right. There's another bank.
Bank's not publicly traded. Oh, shit.
But like these are the things where like it doesn't matter if there wasn't actual things at these banks. Now there is, because everyone's just like, you know.
That's right.
So
Just
this is
know,
the source.
USDC good on chain.
No,
I don't even know, bro. To be honest, USDC I think is one of the largest risks right now, because USDC is highly regulated U.S. entity. The U.S. government has been going after like USDC, going after stablecoins specifically. Like, what happens if they're like, hey, it's illegal for you to let anyone withdraw their money from USDC? USDC for sure depegs, right?
Is JP Morgan Chase good?
The good thing that we know about JP Morgan Chase is that when they go insolvent, they're just going to get bailed out.
Yeah.
Right? Like
big enough.
We got a gem in office. Like, things are good. You know, they're cooking.
This is why I have all my money on Binance.
I don't know, man. I think the only true capital you can hold is you know, ETH, maybe Bitcoin. You know, PO is probably gonna love that one. But like, at least that time when you're losing your money, it's because the money's going down. It's not because the institution you hold your money in is gonna collapse.
So,
like,
we've definitely thought about diversifying. We have a grand total of 2 checking accounts at this moment in time. I may in this moment consider a third. But
your next date that.
What's that?
He said, "Tell your next date that."
I personally have multiple checking accounts too. So and I'll just bring that up front and center. It's gonna be like, all right, first date. Let's have the money conversation.
I mean, here's the thing that really happened is that basically what happened with Silicon Valley Bank is exactly what happened with Nick's relationship, where someone came and asked for $400. And then a multi-billion-dollar institution was like, "Oh, we're gonna sell everything. Goodbye."
So the market just opened. Silicon Valley Bank is down 60%. First Republic Bank is down 31%. Signature Bank is down 21%.
That's where your money is, Kicks.
All 3 are halted.
No, mine's in an even shittier bank.
Signature is, for clarity, is the bank that's backing a lot of these creative fintech startups, where they have an API. For they interface,
Jersey, right?
I don't know where they're based, but the whole fintech space is built on a couple of banks, which essentially were these people similar to the way that FTX was trying to get a bank license by acquiring a bank. A lot of the fintech companies, like where you can look at Chime as an example of one of these banks, where you like that are app based. Those banks they're still technically regulated, but what they were doing was they were giving developers API access, and so you could do things like issue debit cards, you could create your own programmatic bank, essentially make your own app and give people an interface to those sorts of things. Those have not been thoroughly tested historically, and
only 500 billion in deposits, Nick.
In what?
Those 3 banks.
Damn.
Okay. Yeah, the other thing here too is like, I'm gonna be honest with you. I think there's a point. I don't know when it is, but like to long the banking sector into this. Like, First Republic, for example, when I was setting up my bank for my fund, they wouldn't give me a bank account because like we're not doing crypto projects, and so that makes me want to long them here.
Yeah. And here's the thing: like, people are at the same time where we're literally watching kind of what happened in 2008. to an extent, maybe not the full extent, but at least the start's looking kind of similar here. Like, and then the Fed's going to go crank it up another 50 basis points. I think the Fed is probably saying, holy shit, it may be time to 180 cut.
Hold on. Here's it. No, here's the funny thing of this whole thing was basically we print a bunch of money, but the problem is the banks can't even like honor the money that was printed. So that's the situation. Suddenly we were all like, oh, I guess I just have for $20 million all of a sudden. And you're like, what? Wait, hold on. I don't like that money is not like, and now we're all like moving money around to like different places being like, no. Or it's like, yo, give me the cash. But we're like crypto. The picture of crypto businesses is actually going to go the way that you should handle your keys in a similar way is dig holes around like the world in random places and like hide your shit like in the dirt. And that's where we're going to be putting stashes of cash in order to like protect our money based on the way that things are going.
You can't even pull out that much money per day.
No, you can't. That was
I'm about to show up my bank account today and just say 2 duffel bags, get it done.
Can't even pull out has been an issue for a lot of people, and it's been the start of many problems, also relationship issues as well. But I used to go daily prior to COVID and try and withdraw money, and you're set at like a 500 withdraw max or something like that, or maybe $1,000, which is kind of absurd. Like it's such a low number relative to like for like a bank that you're capped.
You know check kiting, right? Where like people would send the checks to different places before they'd cash. If you can get to the next ATM fast enough, you can actually front run it. So if you just sprint and find a bunch of ATMs close together, you could probably get a couple more than 500 out. Just saying.
I think Nick's fast enough to pull that off.
I've seen him run. Pretty fast. Pretty impressive.
Dude, I was before straight up. I do go like I'll go to a bunch of banks and just keep withdrawing and seeing like how much I can take out on any given day leading up to these sorts of scenarios. Just because I'm like, you know what? I'd like to have a little bit of cash, like stashed away here.
What I'm hearing, Nick, is that you single-handedly were the bank run. You just destabilized the whole financial ecosystem. Thanks
Pretty
a lot,
much.
Nick.
I take out $500 a day.
And you wouldn't even give the $400. Yeah, exactly.
I told you to just pay the $400. Okay, you said the relationship otherwise was pretty enjoyable.
You see where my bags have ended up because you wouldn't pay for this good, fine woman's classes.
Well, no, I think what's crazy is what Spencer said earlier, which is like, what's the safest thing? And he's like, honestly, probably Ethereum and Bitcoin. It's the
but
complete.
Are they it's safe in the sense of they won't go to zero, but not safe in the sense of they won't go down? Right?
Well,
you have access to it,
long, Spencer. So it's on.
I don't know. The safest. My great grandmother, when she passed away, we found her entire net worth was in her mattress in cash. And I think about that sometimes because maybe she had the right idea, you know?
Sometimes it seems that way. Look, Spencer, you tweeted recently, I think it was yesterday maybe, that things were starting to look attractive. I'm assuming you were talking about the NFT market because you run an NFT fund. You've been a net seller of NFTs. You were buying a lot. So get this, ladies and gentlemen, if you don't have context, Spencer was buying a lot during the FTX debacle. If I recall correctly, mutants were at around $10,000 Mutant Ape Yacht Club, $10,000 Utes were, get this, at $500 on the day of the FTX crash. Probably the most obvious day for a potential bottom when you think about it, right? And Spencer bought a lot during that period and has basically been selling into the run that's happened since then.
Just a champion trader right here, man. My God, dude. His LPs are very happy. Let's just say that.
I think basically the bank of Spencer is the only place where I'm going to put my money because listen to this, guys. I told you 15 minutes ago, First Republic stock was down 38%. It's now down 51%. These things are literally trading like shit coins.
I'm interested in picking some.
I was going to say they become a buy.
Up.
They become a buy at some point. Everybody's scared right now. It's not going to just stay way down there. It might go lower, but anyway, Spencer, what's your perspective on where we're at and where we're going?
Yeah, I mean, look, like. So I've been really hesitant to buy anything for the last like 3 months or so. Just from stables, ETH felt really high. It was good time to take profits, sell back. I think the emphasis there on the word starting. Like I don't think like I'd made some buys yesterday. There was a few products that were just like there's capitulation happening. Like we're time to ape. But I'm still like a lot in stables, and I'm looking at like, okay, what are the positive catalysts, right? We need like a good old proper crash. Banking crisis is a good one, right? Like, I know that sounds like, why am I saying a banking crisis is positive? Is because like the only thing that matters in the scope of any of this is interest rates, right? And so like interest rates, the problem is inflation just ain't coming down. Employment is super high, and the problem with employment being really high is people have money, like Nick, and his girl. They both had money, right? This is a bad signal for the economy, because for inflation to come down, people need to really not have money, and the prices need to adjust based off that. I think there's a couple like potential outcomes that could cause the Fed to reverse course, but as is, the Fed is saying, and this is kind of what's going on is like, well, they've been aggressively raising rates. Inflation hasn't really come down that much. They're not being aggressive enough. And so, they're really trying to get back to that 2%. Now, I'm skeptical. I think this is sort of like a fool's errand almost, because the problem is, if you look at the monetary base for the United States, the amount of money that's been printed since 2008, we 4x the money supply, right? And I think that we're just seeing inflation as a result of 4xing the money supply. And so, like, this is the challenge that we're faced with today, is that it is just challenging to bring down inflation. And so they're going to keep trying for at least a year, and they're just going to cause as much pain as they can, because they're like, employment's not going down, whatever, right? And so what actually causes employment to go down? What actually causes a good old recession? Get those bars on the Fred graph. What causes that? Like, something really bad has to happen. So banking crisis, like, if that's what causes it, like, the most bullish thing is if this is a big enough crisis, and I don't think it is, but if it's a big enough crisis to cause there to be a proper recession, cause there to be deflation, and cause the Fed to have to act in inflationary monetary policy versus deflationary. Now, the other thing,
Spencer, would you say that a lot of just the entire financial system runs on trust, right?
Yeah, no shit.
Yeah, and so what I'm saying is it feels to me like
I don't trust any of y'all dummies.
There's a couple people that have sharded today. I'm fine. I'll tell you that. I had a good breakfast, healthy breakfast, but there's a lot of people not feeling good right now. And I think the trust is starting to erode in the traditional financial system. I mean, I'm literally waiting.
Wait, what?
Dude, I'm waiting for my business partner to get on in 30 minutes because we have $4 million in a bank account that I want to move to another bank.
You're like out here. You're being like, there's a lot of people out here farting, and I just want to say a lot of that has to do with the bank situation.
Imagine how many startups that have 2 years of runway, and 100% of it is in Silicon Valley Bank.
That's gnarly. It's basically the Web 2 equivalent of people that were in Gemini Earn. Spencer, did you finish your thought?
Yeah, so the withdrawals.
The last thing that I'll say here is my bet has always been, and this is a spicy take, but my bet has always been that the moment to go gigalong, like, you could be longing, spot here and there, but the moment to go gigalong, I think we see a housing bubble crash. I think that, and I know that's an unpopular opinion, but I think that's like, there's no way after that, that brings down inflation, right? And the biggest risk to all of this is oil. If oil goes, like, we're at like $70 a barrel, that's not bad. That's not that inflated, right? We have seen recently oil at like 110, 115 a barrel, right? If the price of gasoline goes up, that will mean inflation continues to go up, right? That is this easy lever. So the only thing that I think, and we're not seeing, I think, oil go down. There's no new fracking thing that's going to happen anytime soon. So like the bet is like, what can crash the economy sufficiently for the Fed to lower interest rates?
It's already happening though. It's literally already happening.
Has to be housing.
Housing sales are already down. The issue is that the cost of the house is
up,
but sales are down. So it's already starting.
Spencer,
no one is selling their home at a 3% mortgage to go buy a home at a 7.5% mortgage.
I just want to acknowledge that Spencer came prepared with the right hoodie today for this conversation. He's got the University of Chicago hoodie.
Top 10 university. Am I right about that?
It's not just the top 10 university. It's the economics, like what the hub, if not one of the hubs of the schools of economics, basically.
So
University of Chicago.
I got a question for Spencer, right? Because this theory has been talked about, not talked about, like there is a large portion of the market, the other 50%, that has been talking about exactly what Spencer's been talking about, and the fact that China has just reopened, and we're going to see more inflation coming because the supply from that will sort of come back into the global supply. So the other 50% of the market already knew this. So why is it for the last 4 or 5 weeks everyone has been saying there won't be a recession when everything looks like there will be a recession, and we're now starting to see essentially the contagion effect from Silicon Valley Bank, the fact that other banks could be affected, a housing crisis is probably going to happen because, as Kix was saying, nobody wants to be moving or selling their house when interest rates are so high. So I'm just confused. Like, we've had this narrative, there's no recession, and now there's this narrative literally 4 weeks later that there is a recession coming.
Okay, because here's the thing. Here's the thing: is nobody knows what they're talking about. Everyone's just guessing. And so when price is going up, everyone's like, what? I guess there's not going to be a recession. And then when price is going down, everyone's like, oh my God, there's a recession. Like, the truth is, like, price has been going down for quite a while. Like, we're basically already in like a recession, but people just won't call it that. The thing is, like, when is it like officially a recession based on the Fed? Is whenever they decide it's a recession, right?
Literally.
And that's just when things feel really bad. And the weirdness of the last, time is all the risk assets have been going down, but like employment has held stable. Wages are going up. Like there's these weird counter indicators that used to move together. And so it's just like we're in a weird moment right now. And the question is this an exceptional moment? And is this an exceptional moment because of all the money printing that went on during COVID, right? Where they were just like, all right, free money, go, like, here you go. Or is this like some sort of structural falling apart because there's been too much QE since 2008? And like, this is actually just a long tail lagging after effect of everything that happened after the housing crisis, right? Like, I don't know. Is this the destabilization of financial systems, or is this really an acute ramification of the last like 2 years? And so that's where, if you look to people like, it's shocking to me even that, like, would I expect, if you told me a year ago that Silicon Valley Bank collapsing and them saying that ETH is maybe a security by the Attorney General, although, curious the impact of that, and Biden administration just going giga hard against crypto would cause like a 10% move in ETH. Like, the volatility of ETH feels much lower than it has been in the past. And I think a lot of that is because we're seeing, like, what does the actual pricing of these assets have to do with anything? Is like a lot of the leverage got shaken out. Like, who's leveraged long ETH right now? Nobody. Like, you were probably liquidated already. And so the swings become less severe. Like, the things you just got to look at is, like, things feel really bad. Things will continue to feel bad. They're likely going to feel worse. But at the moment of feeling the worst is the best buy, right? And so this is the question of, like, I don't know, was FTX the worst moment? Was the localized banking crisis the worst moment? Will the housing, like, I don't know, will USDC being gone after by the government be the worst moment? Like, I don't know. Will the ApeCoin investigation be the worst moment? Like, who knows? Right? Pick your worst moment to long, or just sit out the market.
I feel pretty devastated by the short-term relationship that I just had ending. So, I mean, that seems like a pretty bad moment in it for me. And I feel like that could impact the overall market. It did play into me selling my ape. And I may look back at that and say, wow, I can't believe she screwed me over that way emotionally, Well,
you know what? I think it's important, Nick, that you long the emotional bottom and treat yourself to whatever you want. That's the takeaway from this.
I'm going to Turks and Caicos by myself. I'm just hanging out on a beach and I'm going to take a video of it being like, here I am on a beach, enjoying it by myself, having a meditative moment. That's what I'm going to do.
There's going to be Turks and Caicos ladies nearby. Look, ladies and gentlemen, I let a gentleman on stage that's never been on the show before. His name is Hamilton Chong. His profile picture literally has him on the cover of LA Weekly. Hamilton, it says that you're a serial entrepreneur and founder, fintech and blockchain, and certified crypto investigator. So you're a competing investigator.
That's not really that's not really on the magazine, that cover.
Okay, well, regardless, he's already tried to pin something to the top. I have a hunch that he might go for self-promotion. Ladies and gentlemen, do not say I was aggressive.
Let's go, Hamilton!
Ladies and gentlemen.
Good morning, everybody. Good afternoon.
Hold on, Hamilton.
I just queued it up, and then you shut him down.
I did not shut him down. I wasn't done. You interrupted me. Go find someone to give $400 to. Anyway, ladies and gentlemen, I have my finger on the trigger to boot Hamilton if he tries to self-promote. Hamilton, we are very excited to have you on the show. Please, welcome to the conversation.
Hold on.
Looking forward to your contribution.
Let me just create an illustrative moment of what P.O.'s introduction. He takes a gun, he puts it to your head, and he says, "Don't fuck this up." Hamilton, go ahead.
It's a pleasure. Thank you for having me. I listened to your guys' spaces and I found it very compelling as somebody who owns a regulated fintech and a bank. I've done fundamental and technical analysis on this industry over the last 6 years, building my startup. And I unfortunately have to say we've already hit a recession. The numbers indicate so. The economic development across the world puts us in a situation where we're going to have something called a reset. And that reset essentially happens every 20 to 30 years.
Oh, we got great reset theory coming in here.
Let's go.
Hamilton, the Federal Reserve has been looking for Hamilton's feedback on this. Hamilton, keep going.
I've helped the federal government. I actually solved the world's biggest cryptocurrency scam out of Africa, $3.6 billion. And yeah, that article, LA Weekly, is actually real.
Oh, that's real. I apologize. I will say LA Weekly does have some work to do with their font selection, but whatever. Congratulations for being on the front of that. What was this scam that you solved? And so were you the chief investigator? Were you doing like blockchain analysis? Were you coding something? Did you go door to door and actually extract the criminals and put a literal gun to their head? Like where did you fall into that ecosystem? Were you one of the criminals?
So essentially helping the FBI, the SEC, the Department of Justice, as well as the special law enforcement agencies across the world, basically analyzing and tracking end to end where the money went. Yeah, that's basically what I did.
Very cool, Hamilton. Spencer, go.
I've got a
What's
question.
your name, son?
So you said you own a bank. Do you guys underwrite crypto companies?
No. So essentially, I built the world's first Web3 debit card. Yeah, that's basically what I did.
Sorry,
Just
hold on.
wallet
I bought the world's first
Built.
Oh, built. And so what's the bank backing that debit card?
My own. Just Wallet is a federally regulated MSB out of Canada. But then I also have an underlying bank license called Just Bank. And then I've also partnered with the top 5 banking institutions all across North America.
How many people are on your team?
30. Yeah.
30. And how long did it take you to get a bank license?
7 years.
Wow. Okay. Well, I mean, that
checks out.
That checks out. How much money did you invest in getting that bank license?
I raised a seed fund of 1.5 million at a $40 million valuation. We finished our closed beta literally 2 weeks ago, with the first couple of 100 customers telling us about the experience. And within the next week, we should probably be releasing to the public. So if
wait, hold on. So you got a bank license with only $1.5 million in the bank?
What do you mean?
Hold on. How do you have 30?
Application
How do you have
fees,
30
everything.
employees with $1.5 million in the bank?
What do you mean? How?
Well,
How do you pay all those
because
people?
You're not generating revenue. You have 1.5 million.
90% of
I'd be
the
like
code-
panicking like a bank run was happening if I had that many employees right now. I'd be firing
90%.
left and right.
No, once again, we're a startup and 90% of the architecture was coded by myself. And if you're a serial entrepreneur and you've built startups before, you've got
Which I
to
have.
wear multiple hats in the beginning, right?
You got to wear
that's
hats,
what I
Nick.
No, I understand, but you just said you have 30 employees and you've only raised $1.5 million. I'm calling bullshit
people
on this
believe in
one,
you-
Hamilton. The LA
if
Weekly
people
magazine
believe in-
cover is a lie. I'm exposing the
people-
truth.
If
No, in all
people
seriousness,
believe in you, sweat equity goes a long way, right? Especially if you're building a solution that has global and
You sound like some of my
impactful,
favorite con artists, Hamilton. I'm going to be
Hamilton,
honest.
I'll buy your ebook. I'd buy the ebook, man. Do you have a link to it?
Did you also create a Shopify dropshipping company?
No.
We're changing the title of this to Exposing Hamilton Chong. He's about to be exposed. Hamilton, I did not expect you to
I thought
literally
his first name was Alexander, but it turned out to not be the case. So I was ready to sing.
Promoting a bank was unexpected. Usually it's
30
like a crypto
employees,
project.
1.5 million raised, no revenue. That's called sweat equity. And that math checks out. Thanks for joining, Hamilton. Really
Anyway.
appreciate having you on the show.
Any closing thoughts, Hamilton?
Yeah, I would suggest you guys do extended due diligence on the market and make sure that you have liquid positions in case a reset does happen, so that you and your families are not affected or impacted by something that could potentially happen. So just
I will
look through
say,
your portfolios and just do extended due diligence on maybe previous purchases that you did do, just so that you could have that safety net in the event something catastrophic does happen globally.
we've been doing a lot of due diligence on the overall market. That's actually what we do on this show every morning. And so we appreciate you sharing our thesis and sharing our vision of doing that extended due diligence on the entire market. Hey, thanks for joining, Alexander. Good luck with your bank.
Thank you.
All right, ladies and gentlemen, what a segment there with Hamilton right there promoting a literal bank, a financial.
I just bought a
institution.
bank.
I just bought a bank, man. Like that was really something. Look, to close out here. So to close out, we had our pullback. I bought a Captainz NFT today. So that was like a 5 ETH investment there because Easy told me to. Easy, am I going to go to zero because the whole market's crumbling and we're entering a recession?
I mean, we're in a recession. Like, plain and simple, until the Fed announces it, sure. And like what I said to you, despite this is financial advice, we can ignore that. It's part of the sentence. I think that they do end up ranging, but I feel comfortable getting in sub 5 and long. Like, this is a play that you should just tuck away and forget you own. Like, that is how confident I feel in 9gag. And with the meme token coming out, it just feels like a no-brainer. They've been teasing this Binance support. They've been teasing a ton of other key catalysts with it. It's not going to reveal. You have these treasure maps that give you tokens. So you're going to get a token allocation as well for owning a captain, which is going to offset some of that cost. And that's like my play here. Just, it did sell a little bit last night, sub 5 again. But when I first said Captainz, they were sub 4 and pumped all the way up to 6. So that's where it's like, this has like, for me, the best upside potential for like one of these mid chips. I'm looking at those and then I'm looking at Pudgies for like my 3 to 6 range for quote mid chips.
Well, something else crazy, breaking news. If you longed when PO said that First Republic was down 50%, you're up like 50%.
It bounced all the way back?
No. It bounced.
Okay.
It bounced
About 25%.
Yeah, that's exactly. That's what I mean. I wanted to fucking buy there and I didn't buy, and now I'm really pissed off.
But this is a teachable moment. Is that if you're down 50% and you long and it goes up like to only being down 25%, you have gained like 50%.
Exactly. And that's math right there. That's almost math as good as Alexander Hamilton, who we just had on the show, who bought a bank with only $1.5 million in his bank account and also employs 30 people without any revenue, which is quite an impressive feat. The math checks out.
You just got to add. Nick, I don't know, 10,000 minus 400. Like, it's the simple math that's good. Rule in the day to day. This is what the problem was with Silicon Valley Bank. They didn't do math, right? You lose $2 billion, causes a $20 billion bank run, right? Simple math.
Dude, it's easy. It's easy math here, man. $4 million in salaries, $1.5 million in a bank. That shit checks out.
I mean, if all you know is that, if people just did math, we wouldn't be in this situation, right? Like, maybe FTX wouldn't have collapsed. Price doesn't only go up, could go down. Variance, volatility, all these things. If you looked at math could have saved the day, but it didn't. So the real failure here is the failure of math to win over the hearts and minds of all the people building big companies, managing big money, right? That's the real failure here. I think it's math's fault.
Spoken like someone with a degree from University of Chicago, top university in the United States, especially for economics. Love having Spencer on the show. Nick, were you about to close out with something?
Well, I'm just saying, I was curious what the London School of Economics would say about this sort of situation that we're going and whether they differ from Spencer here. And my guess is probably yes.
Well, so here's the thing.
They'd say convexity is not your friend. That's what LSE would say.
There we go.
I would say
okay. You'd have to know what convexity is to get that joke. But if you do know what it is, Spencer, back me up on that.
I will back you up that Signal is very funny just now in a very niche. And Signal knows math. This is why one of the things too that's funny to learn is we semi-regularly have banking crises in the US, but Canada, never has banking crises, right? Like this is not a thing that is experienced in the rest of the world. We're like, oh, like every like 10 years, 20 years, like it's just a thing that happens. But this
Is it because everybody else is on variable rates for most of their loans?
You know, I don't know. It's like because nobody else runs just like bank runs.
Oh, is that funny to you, Nick? Can't ask a question around here, Mr. $400.
You just throw. Well, it just felt like a random, like a random factoid associated with it. So does this have to do with convexity?
I didn't say convexity, did
I know. I don't even actually understand it. I had to Google convexity, and it has to do with bonds.
I did. It's something to do with curves, baby.
I literally had no idea. It's a measure of the duration of a bond sensitivity to interest rate.
Exactly. Basically, all it means is like the reason why you can have like a tiny percentage move down on interest rates, but you could lose proportionally a huge amount of your portfolio. This is called convexity, and you can have it to the upside and to the downside. But I am not going to get into this because it's super nerd and niche, and no one cares about it.
No, you need to get into this because this is math. This is what people need to learn to not lose their money.
Well,
not lose our money.
I feel like this applies to people who trade swaps. Would that be correct here, Signal?
Bonds. This is all bonds as yeah.
And
purely bonds. All right.
Bonds,
well,
thanks.
Signal's going to teach us a lesson later, but maybe not. We don't have enough time to learn about convexity later during this show, unfortunately. I hear a bunch of boos in the audience saying, damn it, we missed out on the opportunity to learn about convexity.
That's what's happening. That's what's happening. Nick, look, what a day today. What a show today. You've really put on a performance. This might even be 10-hour, Nick. Any closing thoughts before we wrap, buddy?
I didn't actually sleep that well last night. That's my last thought.
That's his last thought, ladies and gentlemen. Hey, look, thanks for listening, everybody. We run the show Monday through Friday, 9 a.m. to 10:15 a.m. Eastern time each and every week, discussing all things crypto, NFTs, technology, finance, entertainment, gaming, and everything in between. Make sure you subscribe to the newsletter. Sign up at thenifty.com, THENIFTY.com. Sign up for the news.